Are you looking for where to invest your hard-earned money? Look no further. We've got you covered with a comprehensive guide on how to make the most out of your investments. Phase 1. Starting up investing in yourself is always a wise choice. Consider allocating some funds towards furthering your education, whether it's taking professional courses or pursuing a degree. Investing in knowledge can open doors to new opportunities and increase your earning potential. Having a side hustle is another avenue for investment. It allows you to diversify your income streams and generate additional funds. Whether it's freelancing, starting a small business, or investing in a passion project, your side hustle can help you save and invest more money in the long run. Remember, your health is your wealth. Allocating funds towards maintaining a healthy lifestyle is crucial. Invest in regular checkups, nutritious food, and exercise. By prioritizing your well-being, you are setting yourself up for long-term success. Phase 2. Capital growth. If you are looking for capital growth, consider investing in growth stocks. These are stocks of companies that are expected to grow at an above-average rate compared to the overall market. Research and identify companies with strong growth potential in sectors that interest you. Startups present an exciting opportunity for capital growth. Investing in early-stage companies can yield significant returns if they go on to achieve success. However, keep in mind that startups carry a higher level of risk. So conduct thorough research and diversify your investments accordingly. Don't forget to scale your side hustle.
Dedicate time, effort,
and resources to grow your side business. By investing in marketing, infrastructure, and expanding your product or service offerings, you can increase your profits and create a more sustainable income stream. Real estate has long been a popular investment option. It provides both capital, growth, and a steady income. Through rental properties, research the real estate market, identify promising locations, and consider investing in properties that align with your financial goals. Crypto has gained significant attention in recent years.
consider adding
Cryptocurrencies to your investment portfolio if you believe in the potential of this emerging technology. However, exercise caution and only invest what you can afford to lose. Phase 3. Wealth retention. For wealth retention, value stocks are a reliable option. These stocks are considered undervalued by the market, but have the potential for growth. Look for companies with strong fundamentals, a solid track record, and a good management team. Dividend stocks provide a consistent income stream through regular dividend payments. These stocks are typically from stable companies with a history of sharing their profits with shareholders. Consider adding dividend-paying stocks to your portfolio for a steady cash flow. Real estate continues to be a reliable long-term investment for wealth retention, with property values appreciating over time. Investing in real estate can provide a stable income stream and potential tax benefits. Do thorough research and diversify your properties to minimize risk. Index funds are an excellent option for inexperienced or time-constrained investors. These funds aim to replicate the performance of a specific market index providing instant diversification and low management fees. Consider investing in index funds across various sectors to spread your risk. Remember, investing in your health is just as important as investing in financial assets. Prioritize your physical and mental well-being to ensure that you can enjoy the fruits of your investments for years to come. So whether it's starting up, capital growth, or wealth retention, there are various ways to invest your money wisely. Consider these options. Do your research and seek professional advice if needed. Start investing today and secure your financial future.